I mean, funnily enough, 500 million doesn't go very far in some things. I would prefer it's 5 billion, but if it's 500 million, I would go for the bilaterals that I'm talking about. So I think some of these, you've got more chance of getting the off-market situations. There's more angles to them. There's potentially more return, better use of your expertise, and there's still plenty of opportunities around that with the right banks.
Okay, good. Thank you. Ari.
Well, it's terribly self-serving, but I would probably partner up with somebody like myself, preferably myself.
This is all sounding very cosy.
That would be a good decision committee that has an operational platform that is capable of dealing with granular stuff, multi-jurisdictional stuff, distressed loans and performing loans and real estate, and then go after the sort of what's on the sort of outside of the periphery and the off the radar, basically, and whether that's done by bilateral discussions or participating in some of the regions that are not necessarily the hottest at the moment. That's something that would have to be played on an opportunistic basis, but to go after the granular small ticket that the big one is maybe not queuing for.
And it wouldn't matter to you where that was. It wouldn't although the assets at the moment you've primarily got Nordics.
Well, you have to have some local skills to deal with the nitty-gritty stuff. That's the key of it. So you would have to look at who are your local partners and then what's the capability of your operational partner, and then go to that region or that jurisdiction.
Okay, good. Thank you, David.
I think it depends partly on sort of how far up the risk curve you're going, whether you're looking for sort of high teens return or even potentially above 20 or sort of mid-teens. But
shall I decide I'm looking for high teens?
High teens, right? Yeah. I mean, I would certainly avoid things where there's competition, because clearly you're likely to be outbid. So again, I would agree with Ari. You try and go below the radar, which implicitly means you look for assets which the large funds aren't going to be interested in terms of lot size, and try and find really good, strong operational partners who also have good joint venture relationships with people locally and a sort of access to deals, possibly looking to real estate with an EBITDA-related cash flow as well, where there's more potential for mispricing. And I suppose, the managed to core type process, if applicable, works. I mean, in a very hot sector like student accommodation, there is distress as well, like Opal, but clearly that's the sort of deal that a lot of people look at.
Good, thank you. Joss?
I think I would partner up with Frederick, hire a lot of Europeans, create a pan-European, all singing, all dancing, distressed real estate business. No, rather selfishly, I think it's sort of what I've been doing as Internos. I think there's way too many real estate investment managers in Europe. There's about 100 of us, and you probably need, on a good day, 50, and on a bad day, 30. So I would use the money to hoover up real estate investment management businesses, aggregate, consolidate, and then list it.
Good, thank you.
Here's my card.
Bermuda.
Morten, would you like to work with yourself, or Ari, or Joss,
I would buy it,
or Frederick?
I would buy a share in Ari.
I've just been handed Ari's business card, by the way, so interesting.
Now, from a Nordic perspective, where we see the best investment case right now is actually residential markets in metropolitan cities. There's the metropolitans in the Nordic capitals. They are growing, they're increasing. There's no vacancy risk at all, and you can finance yourselves extremely cheap. So you can buy, for instance, Copenhagen residential at 5% yield. You can get 80% financing from any mortgage bank in Denmark, and you will pay 1% in margin, and currently 1% in interest, maybe 1.5% if you go out 5 years. That should easily translate into 10% cash-on-cash return, no risk or limited risk. That's what I would do, and then gear it up.
Well, I should say we in a previous life we had a platform in Stockholm called Aros, which we backed to do office to resi conversions in central Stockholm, and it did a high 40s IRR. Fabulous deal.
By design.
It's small, but it's a good strategy if you've got the right local partner and operator. But we were doing it 5 years ago, 6 years ago. We weren't doing it now.
Very good. Thank you very much to everybody for coming, and thank you to the panel. Thank you.